All right, welcome to the first episode of the Mesma Show. I know if you've been listening to Mesma and I for a while, we've been on a little bit of a hiatus, but hopefully we'll get these shows going on a regular basis now. Um, Firstly, we wanted to talk about kind of like the macro background for crypto, which is Bitcoin. We just stumbled upon this article today about Bitcoin's silent IPO, and it's a very like refreshing take on what's happening in Bitcoin right now, like why the price action might be doing what it's doing, because at the end of the day, like we don't really know why. Like humans love to get answers for every little up and down trend, but this is a good like general idea of why Bitcoin is kind of moving in this way. Mesma, do you have any thoughts on that article?
Yeah, and I think you make a great point too about just how everyone always wants to know what's moving the price, and that's actually s such a rabbit hole in itself every single day. And there's always a million reasons why the price is moving, and maybe there's one reason that, trumps everything else. And I think that's kind of what we're all stumbling upon now with this article. Yeah, just a little background, like over the past couple of weeks, noticing this kind of lag with stocks, right? Where Bitcoin's either flat or going down, stocks are up. It's awful. This has happened a couple times in the past, right? This is almost more scary than the COVID crash when everything's falling horribly, but at least we're falling in line with stocks. So it's like, okay, well, it's not a huge deal. But right now, it's almost more scary, even though Bitcoin's at near all-time highs, which is fascinating, right? And so with this article, in the last couple of weeks, I noticed with some interviews, I was digging through some interviews with, the top guys in space, and one of them was with Novogratz, right, from Galaxy. And he was talking about how there was this one 9 billion seller, $9 billion in US dollars worth of Bitcoin. And it was just a single guy, a whale, OG from who knows, like 2010, 2011. And that guy was enough with the 9 billion to, you know, compensate all of the buys from the DATs, all the Bitcoin DATs. And so if one buyer can do that, we need to, you know, take it super seriously because if it's just this one guy can do this, then we can't be, making these huge assumptions about why the price is going down. We can go into that and we could talk about this all day long, but people basically will assume something for why the price is going down and can change their entire outlook and bullishness, which is something you don't want to do. And so, yeah, I think it's worth discussing this article and like the bullish points in here because it'll help people avoid falling into the trap of assuming the price is going down because something's bad, there's something you don't know, the market's smarter than me, and it's actually a lot more nuanced than that. And even simpler in some ways when you look at this $9 billion seller. So yeah, it'd be great to talk more about this one.
Yeah, just expanding on that point, like in other earlier podcasts that we've done, we talk a lot about like the importance of having like a good story. So I think this Substack article uh, is a step in the right direction for putting like Bitcoin holders and especially like early investors, or not early investors, people like just invested at ease. Because like I know when uh, people like in real life that I know buy this stuff, they always like say, "Oh, like why is it not going up like right away?" Because like when you first buy it, like barring probably the people who listen to these podcasts who are well informed, people don't really know why they're buying it most of the time. They just buy it because it's hype and it's gone up a lot. Like the return profile of Bitcoin is obviously insane compared to most assets. And now for S&P to go up, like Nvidia, all these tech stocks, and Bitcoin's flat, these people probably feel like a bit cheated, which is like a weird thing to say because technically in investing, like you should never expect anything anyways, but that's kind of not how most investors think, like especially retail. So this is just important to like reframe their mindset to like a longer term time horizon and will allow Bitcoin to move up in the future as like these other tech companies did that were referenced in the article. Like Jordy talks about how Amazon was like consolidating for a few years after the tech crash in like '01, and it was just kind of flat and everything else was doing well. And then the stocks change over hands to like the longer term holders. And then obviously Amazon has done what it's done. But yeah, it's important to have that mindset shift if you want to be able to hold long term, like just like mentally, you know?
Yeah, exactly. Because if you start falling into these traps that we were mentioning about, oh, there's something wrong with Bitcoin, or the institutions don't actually want it. Like, why isn't the price going up if ETFs are approved and all these new institutions are coming on board, going through the regulatory process? We got Genius Act, Clarity Act. Why is the price not going up? And then you can really fall into some, dark holes where you're assuming something that's way more bearish than the actual reality. And that's why this article is great. And yeah, you make a great point where this will help a lot of people, hopefully, if they read it. And yeah, we can jump into it a bit too, right? Like, so the IPO point is great. It's spot on, right? A lot of companies nowadays, when they IPO, they're already heavily like, they're super lofty. Like they started, we saw with Coinbase or Robinhood, right? These IPOs, they started, Robinhood started around 40, 50, IPO'd, and then instantly went up to 80 and then crashed. And of course, that crash is partly due to the S&P 500 and Russia and inflation and oil and everything else that happened in 2022. But I'm pretty sure that probably would have happened, right? With Robinhood, regardless if the market was going down, because this is what happens with IPOs. And just like with Amazon, Coinbase, these these companies need the insiders to dump finally because it's so concentrated, just like he outlines in his article. And that's actually a good thing because when we do get the runs further on that go way higher, they're going to be more sustainable. They're not going to have these 80% crashes, and he touches on that. So instead of these 80% crashes in the future, we'll have 50% crashes. Instead of these 50% crashes we used to have, there'll be 30%. And that volatility decreasing, sure, maybe we won't get those 10, 100x returns in a year, but at least we're going to have more stability and these longer, drawn out bull runs, which is a great argument, which we can talk about too, for why maybe the 4-year cycle is over. But yeah, love this article. I think anyone listening to this should read it because it'll give you fresh perspective. Very simple, but laid out really cleanly that, yeah, it should make you a bit more bullish.
Yeah, I'll definitely link that in the description. Jordy also in the article talks about Circle. Like Circle is a company, obviously like they do like USDC, but if you pull up their stock chart and we'll include a screenshot of it, you can see like it kind of popped after IPO and now it's just kind of like chopping and like consolidating. So I assume that's like the VC
Mm,
selling. Um, Longer term
it's actually a
players
great example.
are stepping in to buy because I mean like these guys are their revenue's going up. Like it says here, they're up 50% year over year on revenue. So yeah, probably some big things coming in the future for them, but their stock price doesn't really express any hype just because like the market dynamics around it.
Right, like that's such a good example because we've been in a bull run and it still had this dip, even though it had this massive run off the IPO. Interesting, like this one's a unique one because it actually was like priced super low relative, and they missed out on a lot of money. Circle, and they IPO'd, I don't know what it was, like double digits, and then went triple digits, and now it's having its distribution phase. But yeah, they all seem to have a similar pattern, regardless of what's going on with the market. Um, and you have a couple like standout IPOs that just go straight up, like CoreWeave or something. I'm pretty sure CoreWeave did something like that. But yeah, the majority are like that, and it's just standard. And Jordy outlines that in the article too. Just like this is what he saw in the traditional markets. This is what happens. Like this is standard. Okay, this is what's happening with Bitcoin. it's so hard for people to wrap their heads around it because Bitcoin's been around so long. How could it be going through an IPO phase? What do you mean? Well, it's now finally being adopted by institutions. Finally, ETFs. We have the infinite bid. 401ks coming. Now these whales can actually unload without dumping 50% in a day, you know? So it's an amazing thing. We just have to kind of deal with these 6 to 12 months, as he says, of this IPO phase. And he claims we're in 6 months at least now. So I'm hoping, if this is right, maybe we see another couple more months max of chop, and then we should be going higher. But of course, that might not line up well with with S&P 500. Like, given a couple more months, S&P might be up another 30%. You never know, and we get a blow off top in stocks just in time for the IPO phase in Bitcoin to, be tapering off. So, um, a lot of things, a lot of factors to balance there. But overall, this is an article that you should be like, you're feeling a little more bullish after reading.
For sure, for sure. Okay, let's do a little pivot here to Chainlink. I want to hear a little bit
Oh
about
yeah.
your thesis. I know like you've been really hyped on it recently. I used to have a good amount of Chainlink in my portfolio before I rotated it in like I think 2020 or 21. So like why are you
Hmm.
still excited about it? Like I know like the main fundamental ideas around it, but I want to hear it from you.
Yeah. Yeah, so without going down the rabbit hole of Chainlink, because it's a lot, and I'll admit I don't understand all of it fully. So you have
Yeah.
to spend like even Bitcoin, like a lot of people in Bitcoin fully don't even understand Bitcoin. They'll admit it because it's an extreme rabbit hole. Every single one has their own rabbit hole, but for Chainlink, the big one, major points, bullet points to that people should be excited about are, of course, everyone's always thought it was an Oracle network, and that's all it will be. That's interesting, but how much revenue can you really get? They've, of course, expanded from that and they're doing so many more things now, right? So many more things, moving, working with institutions, with Swift. And people know this, but I want to double down on it a little more, which is how big of a deal Swift is. So for example, just from my own work at TradFi, we use Swift every day, and it's they move trillions every couple days. It's an insane amount of money being moved, and it's actually one of the first decentralized. You could say it started decentralized finance in a sense because it's these 10,000 plus banks around the world that all came together and created this messaging system to move money around between banks and currencies. And the Swift network is now partnered with Chainlink. So how much more legitimacy do you really need? And Chainlink's working with Swift network with Linea from SBET, right? So there's all these really great combinations going on there where they're gonna really try to elevate finance. You've got the IRS on board, you got the SEC on board saying, they want to upgrade the financial system to crypto rails. So how does this all relate to Chainlink? They're all working with Chainlink, the big institutions that are in charge of doing this upgrade. They love Chainlink, they understand why it works. There's a couple key points. So outside of the Oracle network, one of the big reasons Chainlink is being chosen is because in finance, there's disputes. So you send money, maybe there was a certain fee you disputed with another bank, and you need to recall that money or adjust the fee. How do you, that doesn't happen in crypto these days, okay? That's not possible. So if you ask any local Degen about what dispute resolution means, they'll look at you like a deer in headlights. I made a post about that recently. Because I don't think people have a clue what that even is. They think just money moves around and there's no big deal, nothing ever goes wrong. No, we need dispute resolution. That is something Chainlink is working on. That's something I have to deal with my TradFi job and have for many years. So I know how important it is and how much it slows down the system and settlement. So if you could have that built in to these transactions that are being on the CCIP from Chainlink, then yeah, you're gonna have a lot of savings for these big banks. So there's actually a lot of good points to be bullish on the banks if they adopt this. But yeah, that's a whole another rabbit hole we can go into. But yeah, that's the big thing. So dispute resolution, Oracle network's obviously huge. Then conditional settlement, right? So people know about conditional settlement like Ethereum, but there's certain things, right? Like certain metrics that have to be met when these banks are transacting with each other. And those things might change very quickly. And you need this Oracle network that also has conditional settlement. So all these banks can continue transacting and doing all their trades every day. And that's something that only Chainlink can provide. They're working with Chainlink, so it's clear as day to me. I'm buying more Link. I doubled my position the last couple of weeks, so I'm extremely bullish.
And then what do you need to cut that position? Like, is there any like catalyst where you're like, okay, like I'm happy I see this, like I'm taking like X% off?
Yeah, that's a good question. That's like the hardest thing is profit taking, at least for me personally too. I think a lot of people share that. But I, for me, it's a number. I think taking in Catalyst as triggers is also really good. But for me, I think I would take maybe a chunk, 10-20% off triple digits. So once we hit $100, then I'll take profit. But this is such a long-term play for me, 5-10 years, that I wouldn't even consider taking profit until at least triple digits. So right now it's at 17. So 17 to 100, and I'll take 10-20% off, depending on how the market's looking.
Okay, true, true. Okay, let's do a little pivot again to crypto versus stocks. Like I know we just talked about the Bitcoin IPO phase, um, but that doesn't seem to really transfer over to all the coins. Like I know we've seen like Hyperliquid do well, some other coins, of course. What do you think about like your broader portfolio play, like stocks versus crypto? Do you think like crypto has like more ability to go up in the future? Like obviously you're in Link and other coins, but just like for the future.
Yeah, this is a really fun one to talk about too. I haven't heard people talk about it a lot. But I'll start with this perspective for people, which is imagine you're a TradFi, you know, rich old couple. You've got millions in your 401k. It's all exposed to stocks, and you have, S&P 500 and maybe some emerging markets, whatever. It's all stocks. And you've got a really nice, money manager that does it all for you. They're going to wake up one day soon and realize that they don't actually own the economy. They don't own what's actually being produced from the economy fully. One of the number one jobs for people managing money is to be diversified. If they all of a sudden aren't diversified, in the case where crypto starts generating massive revenue, which it is doing right now, then they won't probably be diversified. So they need crypto to say, okay, we want to capture the world. We want to capture its growth. We need to move some exposure from our stocks to crypto because if crypto's taking revenue and growing, that means it's taking it from TradFi. It has to be, right? That's unless there's new businesses being created, sure there will be, but so far it's finance, and finance so is already a thing in TradFi, and so it's sucking money from TradFi. Therefore, everyone's going to have to update their portfolio. So I mentioned this because if you start thinking in this mindset of like this is a guarantee, as long as revenues increase, which is obviously not a guarantee, but it's looking damn good right now, then that's why you should be bullish long-term alts. So yeah, I'm bullish stocks. I've got those in my portfolio, some big ones, some small ones. And to be really blunt about it, the altcoins have been trash. They've been terrible. They're still at lows from 2022, some of them, and they just have not caught on. But there's been a couple, as you mentioned, hype, right? ENA, for example, has done well even after its, TG. And so these ones, why are they doing well? Because they have so much revenue. And so when they have this revenue, now you can start doing these discounted cash flows. You can start saying, okay, we can value this. They're burning tokens. What is this? This is maybe kind of like a stock, but is this security? Well, we don't have to really worry about that as much anymore because the SEC is chill. But this is why this moment is so key because we're weeks away from the Clarity Act, which we can go into too. We can take a pause there, but the Clarity Act's a huge deal because it's going to allow everyone to actually say, hey, is this a security or not? Are we allowed to invest in this? What do dividends look like in crypto? And then the big institutions can finally come in. And if you listen to all the interviews from the guys who've been in the industry forever, all they ever tell you is the reason why these big guys have not been able to come in is because of regulatory uncertainty. And that's finally being cleared. And so I'm extremely bullish on even the most risky altcoins. But yeah, we can dig into it more.
That's a good point on like financial advisors where a lot of them like they obviously need like your portfolio to go up, but as crypto becomes like a bigger part of driving returns, they have like no way
Mhm.
of like investing in that other than like Bitcoin ETF. But like if like
Right.
these smaller emerging plays like a GeoNet or like some of the other deep end plays or some of the DeFi plays, they won't have any exposure to that. And the thing about like the traditional market, which is like beautiful, is like if you just buy like the SPY, when those companies do well, they get
Right.
brought into that basket and they start pumping your returns. So like you're in all the companies that do well anyways if you're in the SPY. But if you're not in crypto, you won't have any um, access to those gains. And obviously right now, like the Mag 7 drives all of those returns, but maybe there's a time in the future where it'll be different. And then especially if you have a smaller portfolio, like if you're not like institutional size, you can still get a lot of appreciation with these crypto projects in relation to liquidity. So it makes sense
Right.
for your fund size. So
Yeah,
it'll be
you
really
make such a
interesting.
good point there.
Yeah.
Yeah, I mean, no, like I really want to double down on that one point you made, which is like, yeah, these fund managers don't have to worry as much because you're right. If the 500 first best company, largest company is starts to do better, they don't have to worry about it because it just slides into 500th and they're all set. And there is not a mechanism in place right now where the 500 first, biggest market cap crypto can slide into the 500th. And so you you lead me to this other really fascinating point, which is that we might see stocks and crypto converge, and you're seeing a lot of the big guys in the industry who are responsible for this happening talk about this, where stocks and crypto will converge into one standard, and so you'll actually have an S&P 500 in the future. It'll be the same one from Vanguard, but it'll just have Bitcoin or crypto or whatever else is in there. But maybe they won't be the commodities. Maybe it'll be the revenue generating tokens, or will it be Bitcoin? Could Bitcoin be in the SP 500? Probably not. No, obviously, because it's different. But if it was a revenue generating token, maybe it could be in the SP 500. So another super interesting area that I don't think a lot of people are thinking about is this convergence rather than them being two separate things. Stocks and crypto converge.
Yeah, for sure. I mean, there's also been like a lot of TradFi like innovations, even like in the past couple of months. Like I'm sure you saw, I think it was JP Morgan where they're doing crypto collateral for mortgages. Do you see that?
Yeah, I think I did see that.
Yeah, so like it's just like tax advantaged holding, which will allow the coins to go up like even more smoothly than they have before. And one of the things like that like a lot of people in finance know is like the buy, borrow, die mentality, where you like don't really have to pay tax if you just borrow against your holdings. And like
Right.
with that allowed for houses now through JP Morgan, that helps the industry a ton. Because like obviously if you're a whale and you have like $1 billion in crypto, it doesn't matter that much. But there's a lot of people on what's it called? Like on the margin where that would like help them like a ton. And I think that's kind of like underappreciated.
Yep, I think that's spot on. Yeah, the margin's a really interesting one too. We go on a whole rant about that too, which is fascinating. And anyone that is a little off topic, but Lynn Alden, you should definitely get into her 'cause she talks about this a lot, how important on the margin is. And you can see this, right? Where $100 of buy pressure into Bitcoin could actually increase the market cap by more than $100. And that's the multiplier effect too. So if there's less liquidity, that slippage actually increases more value than was put in. Fascinating thing to look into. I don't think a lot of people fully understand it. But yeah, you just made me think of it. So it's something anyone listening should definitely dig into if they don't know about it. But yeah, we can move on to
Yeah,
our next topic.
those market dynamics are like really interesting. Like what before I was in crypto, like trading stocks, like you don't really realize it because the liquidity is so deep. And then you get on like a Uniswap, Pancake Swap, like the Pump Fund, and you put like a few $100 into a token, it pumps like the market cap
Right.
by like thousands and thousands of dollars. It's really interesting because that's like how all markets work at their core. Like you see this even like in real estate. Like same thing with NFTs. It's like you can sweep the floor, put in like 10, 15 ETH, and then the next batch of NFTs are like listed like 30% higher.
Right.
And that's just kind of like how it
Yeah, you just need
works.
one whale to move it up.
And that's like the whole thing. Like that's like a big thing in TA, like uh getting through like those resistance points or like support points on the short side. Very, very interesting
Yes.
stuff.
Yeah, and well, the price and the margin and this whole multiplier effect is so key for Bitcoin too because it actually is scarce, right? Anytime we have another asset, like let's say gold, for example, and it goes up like it has, well, the miners are going to start mining more gold. And so this multiplier effect will be met with more supply. But in Bitcoin's case, when it truly gets to that point, and we have not seen it yet, I'm talking the point when the exchanges literally get depleted to zero and people are scraping buy for Bitcoin to try to buy that shit, right? Like you cannot find Bitcoin. Imagine that scenario. That's when this multiplier effect goes bananas. And, $100 might be $1,000 worth of market cap gain. So anyway, it's just super interesting and yeah, I personally want to learn more about it because I think there's a lot more to it than it seems. It's not as simple. But yeah.
Yeah, 100%. I was also seeing some people on X talk about how there should be like um, a crypto like ETF. Like imagine like the SPY, but for crypto. And people were joking that crypto coins, they don't really go up like that. Like you couldn't really have like a super long-term outlook on crypto unless you have like it's like Bitcoin and ETH. Those are like the only two you'd have in there. Like if you had an ETF with like 15 coins, like what would you put in there?
Right. Well, that's that infinite bid, right? I mean, imagine stocks without 401ks. Like, I'd be curious how much 401ks contribute to the average yearly gain in the S&P 500. And you just think about how crypto hasn't had that, and it's now getting that. I mean, these are such big changes that cannot be overstated. You cannot overstate that. That is so big, and people are still just trying to find ways to be bearish. Sure, who the heck knows what's going to happen the next few months? But this is as obvious as a trade on a 5, 10 year horizon as you can get.
Yeah, that makes sense. But there's also like other liquidity hurdles. I think sports betting is like a big one.
Mm,
Like that just like siphons liquidity like from stock market as well, like from every asset class. And like it really like adds up because obviously you'd rather like bet on like the World Series or bet on like a basketball game versus investing in like Bitcoin or ETH. or like
Yeah, it's
pumped
not as
up fun
fast.
tokens. Yeah.
Not as much dopamine unless you're using perps, and perps is hard for the average retail, NPC. But on that point of competition with sports betting specifically, and something interesting to think about is poly market and Kalshi, or however you pronounce it. These guys are now starting to scare the big sports betting companies because they're doing sports betting and they're getting massive volumes. So my point is, it's interesting because what if we get flows from US dollars into Bitcoin ETH backed markets on sports, but they're all on Polymarket and Kashi, and you're getting people now cashing out in Bitcoin and Ethereum. So it is really interesting if you start thinking about these competitions and how crypto can compete in the with these competitors and just keep money in the crypto ecosystem, right? So that's another bold point you can think about too.
Yeah,
But yeah,
Polymarket's
it is a good
a
point.
great example of like a crypto company doing well, but they don't have like you can't invest in them.
Right, you can't. I'm sure they'll do an airdrop, maybe. I don't know. I mean, this is the thing too, right? It's like you're seeing some companies from crypto now IPO and not even do a token. And then you still have ones that are IPOing but also have a token potentially. So we really need a standard because I don't want there to be a stock and crypto. I think there should maybe be. Actually, I don't know if I've really formed my opinion fully. Like, it'd be interesting to hear from people in the industry if they think there should be a one standard or if they should be separated. But yeah, we'll see what happens.
Yeah, because there's kind of like that issue with like FTX and FTT. It's like,
Right.
what does FTT even do?
Right. That was fascinating.
So yeah, I think it'll be really interesting to see how that unfolds going forward. And also like something interesting to mention as well about all these new products. Like if you're um like more quantitative, like there's a lot of opportunity to do like arbitrage stuff with these new like with Polymarket or with Kalshi, just because they kind of you can replicate their cash flows with other means. And then like if there's
Yep.
differences in prices, like that's free money. Like that's what arbitrage is. But that's a bit more of like an advanced topic and like it takes a lot of work to find stuff like that. So we'll probably move on
It
from.
is, yeah, no, that one's so cool though. Like, it is really, it is a dance. And someone who brought up a great point, I think it was Tom Lee. If, maybe we can post the interview. We'll talk about it on the next episode. Tom Lee has a great clip of him talking about how hedge funds, how institutions will use these prediction markets to bet on certain components of earnings releases or certain components of the balance sheet rather than, having to go all in on one thing like an earnings release, for example, and having to bet on that rather than a certain component of it. And that is a game changer. And Tom Lee has a great way of outlining that and illustrating how that might go down. So, yeah, we should definitely talk about that on a future episode.
Yeah, I definitely have to look into that because that's one of the things that um, I don't really like about big companies. It's like, let's say Google is like doing earnings, but you just want to like invest in that one little part of Google. Like you have to like long the stock or buy calls to get that exposure. But with Polymarket and like I haven't put any bets on Polymarket, but I'm not sure exactly how they choose like which markets are made. But it would be
Yep.
really cool to like be able to bet on like those small things because obviously like with a lot of the companies that we're invested in, there's smaller parts of that company that we're more bullish on than others.
Yes.
Um, like even like with Tesla, like there's going to be um, cycles within the company, like the upcoming robotics like bull market, like that's going to push a lot of revenue for them as their car sales fall behind, like not in like exact dollar value, but in like growth percentage compared to the robotics. And because the market
Right.
cap's so big, it obviously will have an impact on the market cap, but you'll be able to get so much more juice, maybe, if you can bet on those more granular aspects of their earnings report. So that's pretty cool.
Yeah, and I think this is super underappreciated in terms of tokenization too, right? And then we have to wait and see. Like, will this be? Maybe we'll see a combination. There'll be ways through prediction markets, polymarket caution, but there'll also be ways through innovations in tokenization. And Tom Lee also talks about this. Aside from the prediction markets, imagine tokenization purely a different asset and business lines from corporations. So with Google as an example, what if I want to invest in Waymo only?
Yeah, exactly.
Well, like you said, I don't want to buy the whole company. Maybe I'm worried about ChatGPT and Google search, but I'm not worried about their Waymo. Like Waymo's second to Tesla or whatever, right? Maybe you're bullish on Waymo. Maybe you could buy a tokenized Waymo in the future, right? And it's just exposed to Waymo. And that is so cool. And that changes everything. It changes everything. So I can't wait to see what happens. I think people need to have a bigger imagination and they need to, yeah, expand their mind a little bit about what's possible with this technology because it's a lot more than we think.
Yeah, that's a good point. I mean, this is just like spitballing, but it'd be so cool if like companies turned into ETFs. So like let's say you have like Google, right? Then under that, like Google is like the ETF, and they have all of their like little companies in that ETF. So you can invest in like Waymo if you want. You can invest in OpenAI. I know there's probably like a bazillion others underneath their umbrella, but like same with Tesla, like you can invest like in those certain like business lines.
Yep,
That would
that's
be
really
like
cool
that would be
too.
super cool because I know like we could get um a lot of like returns from that just investing in the smaller areas that we're bullish on versus just the company as a whole.
Right. And then even all their picks, right? Because like Google invests and does private rounds in a bunch of companies. And what if we could just get a piece or a portion of all those investments that they do, that they see line up with the future that they envision? And that would be really cool. And it'd be, save people a lot of time, effort, and be able to actually get into these deals. And then we didn't even touch on the whole accredited investor law, which I like to harp on a lot because it's such a big deal, and I think that's ripe to be changed. So that's another whole one we could talk about too. But crypto is going to, if they don't fix it, if TradFi doesn't fix it, crypto's fixing it, and we're already seeing that. And that's why I think it's still so important to have that barbell strategy where you're getting these smaller tokens that have huge upside because essentially that's like you're an accredited investor. You're going into angel investing. You can call yourself an investor in a sense if you buy, these small crypto tokens. So I think that's an incredible opportunity for people listening. Uh, Take it more seriously because there's this gray area right now, and that's not going to last forever.
For sure, for sure. Okay, I'm gonna wrap up this show, episode one of the Mesma Show. Uh, if you like this episode, leave a like, leave a comment on what we should discuss next. If you want to talk to us on Discord, we'll link the Moonmat Discord below, and we'll also link to the Substacks and stuff that we were talking about today. See you in the next episode. Peace.
Peace.